Hello viewers, welcome to my channel. I'm Hasham. Now I'm going to start the problems on cost of capital. So far in this chapter number 4, I have completed the theoretical aspect. The first 3 videos I have given on sources of long-term funds. Next 2 videos I have given on capital structure. 3 videos I have given on cost of capital and 1 video on dividend policies. So problems are based on theory. So before starting the problems, I always suggest to my students to just follow the theory, understand the theory. Then only you can enjoy learning the problems. So if you have not watched the theory videos, I suggest you go to the playlist of my channel. Select the subject Financial Management for BBA. Select the videos of chapter number 4. Watch all the videos, be perfect on theory, then you can understand the problems. Now before starting the problems on cost of capital, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always without problems you cannot understand my lecture. So better to keep the hard copy, a printout of the problems. Take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. So in the theory video, I have explained you the meaning of the term cost of capital. It is the minimum return required on the investment in the business. On the investment in the business, minimum return which we require so that the market value of the share will not fall down. If we earn less than the cost of capital, then the market value of the firm will decrease. So in order to not to decrease the market value of the share, the company must earn a minimum rate of return on investment. That is the cost of capital. And I have explained you the importance. And how to calculate cost of capital, 2 steps are there. The first step, calculating the specific cost. And the second step, second calculations are calculating the weighted average cost of capital. But first of all, we focus on learning how to calculate the specific cost of each form of funds. Normally the funds are in the form of equity, preference, debentures, retained earnings. So we are going to calculate what is the cost of debt, what is the cost of preference, cost of equity and cost of retained earnings. Now I am going to start the first problem. See the first problem. A company issues 50,000 irredeemable 8% debentures of 10 each at a premium of 10%. 2 types of debentures are there: redeemable, irredeemable. Irredeemable means the period of redemption is not given. The company will take back the debentures at the time of winding up. So what is the time period is not given. It is called irredeemable or perpetual debt, continuous debt. The formula will be different for irredeemable and redeemable. So after completing 2 problems on irredeemable, then we'll go to redeemable. So it is irredeemable debentures of 50,000 rupees and each debenture face value is 10 rupees. So 50,000 into 10, 5 lakh rupees debentures the company issues, but at a premium of 10%. So we have to add the premium. So 5 lakh rupees face value, 50,000 rupees premium. Total 5 lakh 50,000 is the issue value. The cost of flotation are 2%. These are the expenditure on issuing the debentures, cost of flotation. So first we take the face value, add premium minus flotation cost to get the net proceeds on issue. Assuming the tax rate of 60%, calculate the cost of debentures before tax and after tax. So you must know the formula how to calculate cost of debt. It is the symbol is KD. So first of all, working out interest. 50,000 debentures are there. Each debenture face value 10 rupees. So 50,000 into 10, 5 lakh. And the rate of interest which is given in the problem is 8% debentures. So 5 lakh into 8%. 40,000 is the annual interest payable on debentures. Now net proceeds on issue. Students will commit the mistake in this calculation. So be careful how to calculate the net proceeds on issue. Take the face value or nominal value. The nominal value of all debenture is 5 lakh. But when issued at premium, we have to add the premium. So how much is the premium? 10%. 10% of 5 lakh 50,000. So total is 5 lakh 50,000. Now 2% is the flotation cost. Expenses incurred 2%. 2% on 5 lakh 50,000. So including nominal value and premium, 5 lakh 50,000 into 2%, 11,000. Subtract 11,000. So 550 minus 11, 5 lakh 39,000 is the net proceeds on issue. So every calculation we require NP, net proceeds. So premium will be added, flotation cost will be subtracted. Now KD before tax. KD before tax. Remember, the cost of capital depends on the formula. So you have to remember the formula KD before tax. So the formula is I divided by NP into 100. What is I? Interest. Interest on debenture. Already we have calculated interest on debenture 40,000. Right? NP stands for net proceeds on issue. Just now we have calculated 5 lakh 39,000. So 40,000 divided by 5 lakh 39,000 into 100, you will get 7.42%. This is the KD, cost of debt before tax. Now if you want after tax, multiply KD after tax is equal to KD before tax into 1 minus T. Simply you have to multiply with 1 minus T. T stands for tax rate. And what is the rate of tax payable by the company? It is given in the problem as 60%. 60% means 0.6. So 1 minus T, 1 minus 0.6. KD before tax already we have calculated 7.42 into 1 minus 0.6. 60% means 60 by 100. You will get 0.6. So 1 minus 0.6, you will get 0.4. So multiply 7.42 into 0.4, 2.97. This is the KD after tax. So KD before tax 7.42% and after tax cost of debt is 2.97%. That's all. This is the first problem. Simple. Now, second problem. A Limited has 10% irredeemable perpetual debt. That means continuous debt. No redemption period is given, just like the previous problem. Of rupees 1 lakh. The face value of all debentures debt is 1 lakh. Rate of interest is 10%. The 10% of 1 lakh is 10,000. Annual 10,000 rupees interest payable. The tax rate 50%. Determine the cost of debt before tax and after tax, just like the previous problem. If the debt is issued at par value, A, at par value means face value, nominal value. Then at 10% discount, B point, 10% discount, C point, 10% premium. In this, sub-questions are given. We are required to calculate KD before tax and after tax. Case 1, if the debentures are issued at par value, face value. Second, if it is issued at 10% discount. And third case, if it is issued at 10% premium. So in the three different cases, we have to calculate KD before tax and KD after tax. KD before tax, the formula is I by NP into 100 before tax. If you want KD after tax, so whatever KD before tax you get, multiply with 1 minus T. Simple. If you multiply 1 minus T after tax. If you do not multiply 1 minus T before tax. That's it. Now I stands for interest on debt. It is given in the problem 1 lakh rupees debt and 10% is the rate of interest. So 1 lakh into 10%, 10,000 is the annual interest. Rate of tax, T is the rate of tax, 50% given, 0.5. NP, net proceeds on issue. When the debentures are issued or when the debt is raised, how much amount the company received, that is called net proceeds. whether the company issued at par value or discount or premium. Three cases are given. The first case, issued at par. Par means face value, nominal value. एक शेयर 10 रुपये का है तो 10 रुपये में ही इश्यू करे, ना प्रीमियम है ना डिस्काउंट है, तो 10 rupees share is issued at 10 rupees. That is called par value. So net proceeds 1 lakh. Face value of all debt is 1 lakh. No premium, no discount. Then KD before tax. I, interest 10,000, net proceeds 1 lakh into 100. So 10,000 by 1 lakh into 100, you will get 10%. This is KD before tax. Now we need KD after tax. So multiply KD before tax into 1 minus T. KD before tax 10% and 1 minus T. T is 0.5. Tax rate 50%, 0.5. 1 minus 0.5 is 0.5. So 10 into 0.5 is 5%. That's all. So we got KD before tax and after tax if the debt is issued at par. Now, issued at 10% discount. When the company issues the debentures, it is issuing a 10% discount. So discount should be subtracted, deducted from par value. So here NP is equal to 1 lakh rupees is the par value minus 10% discount. So 1 lakh minus 10%. 10% of 1 lakh is 10,000. So 1 lakh minus 10,000 is 90,000. These are the net proceeds. Now KD before tax. Interest is 10,000. Whether the company issues at par value or premium or discount, the interest always will be calculated on the face value. So interest 10,000 remains same. Net proceeds now it has become 90,000. In the first case it was 1 lakh. Now it has become 90,000 because debentures were issued at discount. So 10,000 by 90,000 into 100, 11.11%. This is the KD before tax. Now KD after tax. So KD before tax into 1 minus T. So KD before tax 11.11%. Mine into 1 minus T. T is 50%, 0.5. 1 minus 0.5 is 0.5. So 11.11 into 0.5 will get 5.56%. Finished. Two cases completed. Issued at par value, issued at discount. Now issued at 10% premium, third and last case. 10% premium. When premium is there, we have to add up the premium to the face value. So net proceeds is equal to face value plus 10% premium. Face value is 1 lakh. Nominal value is 1 lakh. 10% of 1 lakh is 10,000. So 1 lakh plus 10,000, 1 lakh 10,000. This is the net proceeds. Now again we substitute the values in the formula. KD before tax. 10,000 is the interest divided by net proceeds 1 lakh 10,000. So 10,000 by 1 lakh 10,000 into 100, 9.09%. This is the KD before tax. Now we need KD after tax. So KD before tax into 1 minus T, that is 9.09 into 1 minus 0.5, 0.5. It comes to 4.55%. Finished. So two problems I have completed and these two problems are irredeemable debt. The period of redemption is not given, then these formulas will be applied. Now next, third problem, we have redeemable debentures. That means a new formula we have to apply because the debentures are redeemable. See the third problem. B and C Limited has issued 20,000 12% debentures of 100 each, redeemable after 7 years. Remember, this point was not there in the previous two problems. Redeemable after 7 years. That means the company will take back the debentures after 7 years. The life of the debenture is 7 years. Right? That is redeemable. How many debentures are issued? 20,000. Each debenture face value 100. So 20,000 into 100, 20 lakh is the face value of all debentures. 12% is the rate of interest. Tax rate 40%. Compute cost of redeemable debentures under the following situations. First situation, issued at par value. Second situation, issued at premium of 5%. And third, issued at a discount of 5%. So again, just like the previous problem, three situations: par value, then premium, then discount. Remember, premium will be added, discount will be subtracted. No flotation cost. The only new point is the debentures are redeemable after 7 years. So here, cost of redeemable debentures. The formula will get changed. KD after tax. KD is the symbol for cost of debt. After tax is equal to I plus RV minus NP divided by N, whole divided by RV plus NP divided by 2 into 1 minus T into 100. This formula will give you after tax. The only thing, if you do not multiply 1 minus T, you will get before tax. If you multiply with 1 minus T, you will get after tax. That is the difference. But some new concepts are introduced here: RV, NP, N, right? So where I is equal to interest. The rate of interest is 12% on the whole debentures, 20 lakh. 20,000 into 100, you will get 20 lakh debentures, 12%. So 20 lakh into 20,000 into 100 into 12%, you will get 2,40,000 is the annual interest payable on debentures. Then RV stands for redemption value. That means after 7 years, at what value the company will take back? It depends on the agreement. At the time of issue of debentures, the company will declare that after 7 years we will redeem the debentures at par value. Or after 7 years the debentures will be redeemed at premium. Or after 7 years the company will redeem at discount. Anything may happen. It depends on the agreement between the company and the lenders. So now, in our problem, nothing is given. So we assume that RV, redemption value, is the face value. The face value is 20 lakh. The company issues 20 lakh worth of debentures. So RV redemption value is equal to face value 20 lakh. In the coming problem, it may change. Now, net proceeds. NP stands for net proceeds. Now, it depends on whether the company has issued at par value, premium or discount. The NP will change according to the situation. N is equal to period of redemption. After how many years the company will take back the debenture? 7 years. So N is equal to 7. T tax rate, 40% is given in the problem. 40 by 100, 0.4. Now, one by one situation. The first situation is issued at par value. In the problem it is given face value. Face value is 20 lakh. So here RV is 20 lakh and NP is also 20 lakh. So KD after tax. Now we substitute the values in this formula. I is the interest, 2,40,000. So I have written 2,40,000 plus RV minus NP. RV is 20 lakh, NP is also 20 lakh. So 20 lakh minus 20 lakh is 0. 0 divided by 7 is 0. Right? Divided by RV plus NP. RV is 20 lakh, NP is 20 lakh. Divided by 2. It is given in the problem formula. RV plus NP divided by 2. So 20 lakh plus 20 lakh divided by 2. 40 lakh by 2 is 20 lakh. So 2,40,000 divided by 20 lakh into 0.6 into 100. Always, while watching the video, keep a calculator, your pen, your notebook ready. Immediately make the calculations and check whether you are getting the same answer or not. If you practice like this, then only you can be able to get the complete clarification of these problems, calculations. Otherwise, simply if you watch, if you listen the lecture, it will be only 50% beneficial. If you want 100% from these videos, follow my instructions or maintain running notes. Now, so 2,40,000 divided by 20 lakh into 0.6 into 100, you get 7.2% is the KD after tax. Similarly, issued at 5% premium. That means premium will be added to the face value. So net proceeds is equal to face value plus 5% premium. So 20 lakh is the face value. 5% of 20 lakh is 1 lakh. So 20 lakh plus 1 lakh is 21 lakh is the net proceeds on issue. Now we substitute KD after tax. I, interest is 2,40,000 plus RV. The RV redemption value is 20 lakh. 20 lakh minus NP. NP is 21 lakh. So 20 lakh minus 21 lakh is minus 1 lakh. Right? So minus 1 lakh divided by 7. You will get minus 14,285.71. So 20 lakh minus 21 lakh minus 7 minus 1 lakh. So minus 1 lakh divided by 7 you will get minus 14 lakh 285.71. Divided by 20 lakh plus 21 lakh divided by 2, 20 lakh 50,000. Denominator 20 lakh 50,000. So this plus into minus will become minus. So 2,40,000 minus 14,285.71 divided by 20 lakh 50,000 into 0.6 into 100. So first you subtract 2,40,000 minus 14,285.71, 2,25,514.714.29 divided by 20 lakh 50,000 into 0.6 into 100. 6.61%. That is the KD after tax when the debentures are issued at premium. Now last and final case, when the debentures are issued at 5% discount, the discount will be subtracted from the face value. So NP, net proceeds, face value 20 lakh minus 5% discount. So 5% of 20 lakh, 1 lakh. So 20 lakh minus 1 lakh is 19 lakh. That is the net proceeds, NP. Again we substitute in the formula. KD after tax. Interest 2,40,000, that will remain same. 2,40,000, 2,40,000, interest is same. Plus RV minus NP. RV is 20 lakh, redemption value. Minus net proceeds is 19 lakh. So 20 lakh minus 19 lakh is positive, plus 1 lakh. 1 lakh divided by 7, you will get 14,285.71, but positive. Here you got negative, minus, because 20 minus 21 is minus 1. But here 20 minus 19 is plus 1. So 2,40,000 plus 14,285.71, 14,285.71. Slightly I'll change it, not 14,285.71. So if you add up 2,40,000 plus 14,285, 2,54,285.71. Divided by 20 lakh plus 19 lakh by 2, 19 lakh 50,000. So 2,54,285.71 into 0.6 into 100 divided by 19 lakh 50,000, you will get 7.82%. This is the cost of debt after tax when debentures are issued at discount of 5%. That's all. So in this video, 3 problems I have explained in detail. Watch the video 2-3 times. Then only you can enjoy, you can get the complete knowledge on this cost of capital. So if you are satisfied, give a like to this video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And in the comment, give me the information regarding from where you are watching the video, because in so many countries my channel is being watched. So I want to know from where you are watching the videos and how it is beneficial to you in understanding the concepts. So inshallah we'll continue the next problem in the next video.